Good evening, everybody. I think got a number of people have already joined, so we'll start off the quarterly call now. Welcome everybody for the quarterly call for the quarter ended June 2025 for Kotak Pre-IPO Opportunities Fund. The format of the presentation of the call will remain the same. We'll run you through the fund, the markets, and then each portfolio company, and then we will open up the floor for questions. You can populate your questions in the Q&A tab at the bottom of your screen, and we will try and address those queries at the end of the call. That's will be in the usual format. So I'll just start off right now. Just to recap, this is a 2,000 crore fund which we had raised in 2021 with a final close in January of 2022. The entire fund capital was drawn down in 2023. Of that, about 1,400 crores, 1,436 crores is the current outstanding invested capital, the value of which is at about 1,700 crores. We have distributed about 26% of the fund so far. The multiple on the gross MOIC is at about 1.21x, and the total value to paid in capital is at about 1.13x. And we'll go into the details of the portfolio in the next slide. We have made investments in about 15 companies through this fund, of which 7 companies remain unlisted, which are the top 7 that you see here on the screen. And the balance companies have been listed, and most of them we've already exited out. And Swiggy and TBO Tech also we've partially exited, and the balance holding what you see on the screen today on the first page here right now. That is the 1,436 crores invested, the value of which is at about 1,700 crores, and a gross MOIC at about 1.18x. This is basis the valuation that we have done through a third-party agency in basis the December numbers dated as of March. Go ahead. Recently, in the last 2 quarters, we've exited some of partially exited some of our holdings. TBO Tech partial exit, Aadhar Housing we completely exited, SMT also partial exit, and Swiggy also partially exited. So about from December to July, we've about distributed about close to 110 crores of capital back to our investors. And as we go through the rest of the year and we're getting into the harvesting period, as we've spoken earlier as well, the velocity of exits should start increasing going forward as well. What we have done, and this is what we've been doing for the past couple of quarters, is to give you a stress case scenario basis valuations that third parties are currently marking some of our portfolio companies. There's not much change between valuation done by agency as well as the third party. The only major change is on account of NSE, where valuers have valued it at about 1,500 rupees, whereas the market currently is anywhere between 2,000 to about 2,300 rupees per share. And basis that the NSE mark would increase from 2.27x to about 3.23x. And consequently, our total unrealized will increase from 1.18x to about 1.32x. Most of the other changes are minor. Swiggy and TBO Tech are just market changes between July 31st and today as well. The markets have moved up. So there are some minor changes increase in Swiggy and TBO Tech as well, making the overall unrealized about 1.32x. And consequently, our overall portfolio, including the realized, increases to about 1.34x. On the market trends, this quarter has been a bit subdued, both from an investments as well as from an exit perspective. Overall investment velocity reduced to about $11.9 billion, $12 billion from $14.5 billion the previous quarter, as well as from a year ago of $16.5 billion. It's down to about $12 billion. And especially on the PE/VC side of things, and as well as the buyout stuff side, the degrowth has been there across the board. The velocity of investments has reduced. Number of factors, especially around the global turmoil that we've seen on account of tariffs and global uncertainty. I think the velocity of investments have reduced. Similar impacts we've seen on the exits front as well. Next slide. Where there's been significant drop in IPO activity, secondary sales, strategic sales, etc. The only place which has seen an uptick as compared to the previous quarter was on the open market sales, which is essentially investors exiting an already listed company post their lock-ins, etc. They're slowly exiting in the market. That has picked up vis-a-vis the previous quarter, but as compared to the last year, that is also a drop in exit activity. So overall, a low quarter from both investments as well as exits. Macro factors, though, India has on the growth front, India and on the global front as well, the overall growth has been maintained, but the impact of the tariff impact on India and then tariff impact on other nations, etc., are still to be seen what it will finally translate to. So far, we've not seen a significant negative impact thus far. Markets have seen some amount of volatility on account of some of these announcements, but has also recaptured their previous levels quickly enough. Similarly, in markets as well, there have been both volatility in the flows on the FPIs as well as the DIIs as well. But most of that has seen some level of recoveries in July 2025 and in August as well. So there will be some amount of volatility going forward, which could impact the IPO timelines, the market levels in the next few quarters. But overall, the impact on the economy has not been so significant that it should impact our exit timelines, etc. So we are optimistic about the next few quarters as markets stabilize and take in all these negative news that are coming in from global markets. And we'll see some of the exit activity resuming in the next few quarters. In the next few slides, we'll take you through our portfolio companies. We'll start off with NSE. I mean, everybody's familiar with NSE at this point of time. The Q1 FY26 has seen a drop of about 11% as compared to the same period last year. But as compared to the previous quarter, which was a Q4 FY25, the increase has been about 7% improvement, which most market participants have expected that this Q1 will actually still see further correction because of the entire SEBI regulations. The full impact of that would have been seen in the Q1, but the market activity has improved, thereby on a sequential basis, we've seen an improvement in revenues. Post-June, there was another blip which came in the form of the Jane Street ban that SEBI brought in. There was, again, market volatility for about 15 days, but again, post the lift, the volumes have more or less resumed back to the previous levels, and no other negatives have been seen in the market. And therefore, for the full year, we are fairly optimistic about NSE doing reasonably well as compared to FY25. On the IPO front, some positive news coming through that SEBI is positively looking at their application, and expectations are that the IPO approvals should come soon enough. All investors, I'm presuming, are eagerly awaiting that as well. Because of a lot of these regulation changes that SEBI has been trying to implement over the last couple of years, the one piece where NSE has lost out is that the absolute volume share or market share that they had on the options side, which used to be near 100%, that has now come off over the last few quarters in favor of BSE, where NSE's market share has dropped a bit to about 80%. But this has been kind of stable over the last couple of quarters. We don't see a reason why this should drop significantly from here on. So it looks like all the negative news has already been built into the numbers, and still the numbers have been fairly strong this quarter. So I'm fairly optimistic about the full year for FY26 and the IPO news also coming through over the next couple of quarters.
Dheeraj, can we take a few questions on NSE right now?
Sure.
One question is dividends of NSE, or how are they treated with respect to the investors?
So whatever dividends, the dividends will come in, our expectation sometime in September. Last year as well, the dividends that we got, we we pass through to the investors. Assuming it's a decent number, we usually do it that within the month we'll pass it on to the investors.
And I think this is very specific to one investor who has asked for a single 1 crore investment. How much would NSE be attributing to? So,
Okay, so on the overall portfolio, our 2,000 crore portfolio, NSE was 200, so about 10% of our portfolio investment wise
yeah.
was NSE. So accordingly, for 1 crore investor, approximately about 10 lakhs would be in the NSE shares. At the cost value, at fair value, it will be slightly higher.
While this is not specific to NSE, by when do we expect to exit all our investments?
So our target is, and as maybe we can take this question as we go through each portfolio and recap on.
Yeah, sure.
The Pine Labs, as we highlighted earlier, they filed the DRHP in June 2025. They were in the process earlier. Now they filed it in June 25 for its combination of primary and secondary. Primary raise of about 2,600 crores and an offer for sale from existing investors for about 13% of the shares in the company. They have filed the DRHP with the December numbers, and therefore we don't have numbers post December 2024 basis, but the trend in the numbers have been in line with the September quarter numbers as well. So our expectation has been fairly in line with our expectation. So for the full year, for the 9 months, they have done growth of about 33% on the top line and an EBITDA of about 272 crores, roughly about 90 crores per quarter. And our expectation is that they will close the year, they would have closed the year FY25 at about 350 to 360 crores of EBITDA, which is roughly more than doubling of their EBITDA that they're shown in FY24. Post that, obviously, they are on the road right now doing road shows and meeting investors and familiarizing the investor community with Pine Labs, because there are no other listed comparables as compared in the same, providing the same products and services as Pine Labs is. So they are doing their bit of work to familiarize the company with investors. And the target is that the expectation is that with SEBI comments expected in the next month or so, and then IPO possibly by November, December timeframe.
Dheeraj, who are the bankers to Pine Labs?
The bankers are Morgan Stanley, Axis, Morgan Stanley, Jefferies, and JP Morgan. JP Morgan. 4 investment bankers, 1 Indian, 3 international. That's the. Sorry, Citibank is also one of the bankers, about 5 bankers are there. S&T is the next company in our portfolio, which has also filed their DRHP. This is one of the largest medical device players in India, one largest stents manufacturer in India as well. They filed the DRHP in July 25. This is completely an OFS with the major 3 investors and the promoter offloading some portion of their stakes in the OFS. The company overall FY25, they've shown a revenue growth of about 14% with an EBITDA improvement as well from 110 crores to about 130 crores. Obviously after DRHP, they've not filed any other numbers. The timeline for the IPO will be similar to Pine Labs. That is, expectation is that in the November-December timeframe, they should be ready to hit the market, assuming that markets are conducive enough for this. Overall, the company, the stents business has taken growing slower as compared to FY24, but one of the segments that they've gotten into is called structural heart product, which is the TAVI product, which has grown about 42% year on year, and that could be a significant revenue driver, not just in India, but in the international markets as well. So we are hopeful of and optimistic about the FY26 performance as well. And we'll see as the road shows have started, and they will slowly once they get the SEBI approvals, they will start hitting the market again. Next company we have is PharmEasy, again, API Holdings, which runs one of the largest health tech platforms under PharmEasy on the retail pharmacy distribution and other on the B2B side under the Acnamed brand. Plus, they acquired Thyrocare, which is one of the largest diagnostics player as well. Across the three segments, the B2C side, which is the pharmacy under PharmEasy brand, as well as Thyrocare, have shown growth in this year. And consequently, the overall business has grown about 10%. But the B2B side, which is largely the Acnamed business, has seen a degrowth. The restructuring of that business or reorganization of that business of cutting down on loss-making projects, loss-making accounts, working on their working capital cycles, all of that has resulted in a revenue loss, which was expected to be completed in this quarter. And post this, they should be back on the growth trajectory overall. This year, first quarter, which is usually a slow quarter, has still shown a 10% overall growth, with gross margins remaining consistent and the overall EBITDA break-even. Last year, they had become loss-making. Again, in Q1, they were loss-making, but this year they are profitable or break-even at this point, and their trajectory is that, or the intent is that they will remain profitable all through this year as well. Yeah, I think that's it on that. Over to you, Nidhi.
Yeah, thanks, Dheeraj. On Mobile Premier League, I think the one question which is coming on everyone's mind is the bill that got announced out of the blue yesterday on online gaming. Now, that is something the industry participants are saying they were not even consulted, and it has been brought out of the blue. The bill details are not yet out in public fully in detail, so very difficult to comment. Definitely, the companies will be lobbying with the government as well as take any legal action if necessary for the same. It just literally came out yesterday, so very difficult to comment, and it is being tabled in Lok Sabha, so it is yet to become a law, and hence can't comment much on it, at least in the 24 hours that we have got this information. Having said that, Mobile Premier League has presence in two countries, India and Europe, and through Europe they have presence in other countries as well. And about 40% of their revenue comes from the European business. Both businesses are profitable. In fact, if you can see over here, the third bullet point, Game Duel, which is the Europe business, is growing very, very fast. It has been growing at almost 60 to 70% YOY and contributing a good amount of EBITDA as well. So from that perspective, it is slightly hedged. Of course, the Indian business is also doing very well, and this is just pretty bad news on what is happening on the Indian real money gaming context. It's a blow to the entire industry, and yes, of course, the fortunes of the company and the entire industry are tied to this bill, and now we will understand how the company will and the industry will react to it. We will come back and we'll keep you posted on what is happening over here. And we are in constant touch with the company, and we'll get back on this. As such, the company on its own is doing very well. It has a good cash balance as well to pump in growth if they need to in the European side of the business. And also, in fact, they have a 50% stake in their AAA game, which is not a real money game. It's a AAA game which you play for free-to-play game, and that also is available to them. Again, all largely for non-Indian geographies. That's it on Mobile Premier League. Yeah. On Daily Hunt, this business, of course, has been in news in the last in the last 2 quarters. The company has gone through a sort of a pivot in its it's in its Josh business, while the organic news business has is doing well, but it has seen a bit of a slowdown given the way ad market is going, and so the company is working on building its technology for towards ad retargeting, and that is where Next Words and Value Leaf comes in. Value Leaf is in fact an acquisition that they made, and it is very well known for the BFSI ad retargeting business. On a similar lens, they are working on expanding it to various other segments. Uh, on the Josh side, they are going slow, and in fact, on the tipping business and on the ad business from the short video format, they are revamping that business, and we will come back as they work on that pivot. On the financial controls front, the company went through a transfer of auditor after Deloitte finished its 10 years and handed it over to PwC. PwC, after aggressive risk assessment measures, has taken on the mandate and is now working on the FY 25 audit. And they are start auditors, and earlier Deloitte was the start auditor, which finished its 10-year period. And Deloitte is also helping them fix the internal financial controls that were identified by them to kind of fix those internal financial controls piece. The company, from a cash balance, is the company from a cash balance perspective is fully has around 700 crores of cash, so there is no concern over there. Yeah. Now coming to Licious. Licious is a company which uh, is doing very well after seeing a slow FY24. As you can see, FY25, they have picked up on the growth, as you can see over here, and aggressively, even, while here it is 40%, including the inorganic growth. On an organic basis, also, they are growing 25% organically. So the company has got its momentum back on the growth front, as well as you can see the margins have been improving, or the burn has been reducing. The company is receiving a lot of positive momentum on the offline expansion. They have now got around 6 stores under their own brand name in Bangalore, and they are now will soon be expanding to other geographies as well. Uh, and in terms of the My Chicken and More, which is the acquisition that they had made, that also is doing very well. That gives them leverage of 29 stores spread across Bangalore. They're also, with this entire quick commerce, they're getting a lot of demand and very positive momentum when it comes to quick commerce or under 40 minutes delivery. And that is something that they're now revving up their own fleet to do that in certain parts of the country. Uh, and they are experimenting with that, and they'll expand it as they see progress on that. Their loyalty reward system is also working very well for them and giving them a lot of repeat business from that segment. So Licious has enough cash on its books. However, for its offline expansion, it will look at a fundraise. We'll also work with the company for secondaries process along with that fundraise over there. Yeah. That's on Licious. When it comes to Swiggy, I think this is a public business, so there is not much which I can tell you which you don't know. Having said that, the company had quarter where food delivery did very well. They did better than the competition. However, from a perspective of margins, so while the growth was there, YOY, 19 to 20% YOY growth, but the margins, declined slightly from 2.9% to 2.4% as a percentage of GOV. This was very similar to what was seen with the competition as well. The company expects this to climb back on those margins in the coming quarters. Quick commerce is definitely doing very well, and that has found its mojo. 100% year-on-year growth in the quarter, and with improvement in the and with the capex behind them, January, February, March quarter, they had put in roughly about 300 stores, whereas the last quarter was only about 40 odd stores. So bulk of the capex is behind them. With the stores, around 1,000 plus stores that they have, can take care of 2x the GOV from current status that they have, and hence they're not planning to invest any more, or at least slow down their capex, as they have pointed out in their commentary. And we should see now the goodness coming in from the operating leverage with all this investment in the coming quarters. This is also visible in its price target. Sorry, price which has moved up from the last time when we discussed. It was around 370, 380 rupees, where quick commerce was not getting any value, to now quick commerce getting some value, albeit at a good discount to its competition. And this is visible in the price, which is in fact now jumped up. It was at around 400 rupees, and today it has jumped up to around 420 rupees. We will be, we have a price target in mind for this company. Of course, from compliance reason, we can't tell that price, and we will exit at those price. We have already taken partial exit at 600 rupees, roughly about, around, I think 50 crores has been exited out of this, and we will be exiting the balance. Yeah. When it comes to TBO Tech, you all would have got, a distribution in your accounts very recently from this counter. We had invested about 50.3 crores at the IPO price of 920 just prior to the IPO, and we exited at roughly on an average price of 1412, making an exit of roughly about 1.5, 1.6x. And this uh, uh, company continues to perform from a take rate perspective. The company has delivered because on its account of expansion in the hotel business, which is more lucrative, its take rates have increased. However, as you can see, while the take rate has increased, the margins on the EBITDA side has come down because of the expenses that they are incurring in the expansion in various geographies to build the network effect. And they have cited that by December, the goodness of the same should be visible going forward after the end of this calendar year. Uh, the brokerages have about 1450 to anywhere between 1650 a price target for this company. We have a price target in mind, and we will be exiting the balance. The balance left is about, on a principal basis, roughly about 17 crores left on a actual, valued as per the current price. It would be roughly about 25 crores, which we will exit opportunistically, subject to a price point being achieved. So that's a small exposure left. Yeah, and that brings us to the end of all the companies. Yeah, just to cover, sorry, you can just go back. Yeah, this is the amount that we exited. We took out about roughly 37% of our portfolio, oh, sorry, 66% of our portfolio that we divested, taking out our principal and giving a IRR of 45% at a 1.5x MOIC. Balance that is left, we will be exiting shortly. Yeah. Yeah, this is just a summary of where, in general, our portfolio companies are. Happy to take certain questions. I already answered questions about MPL on what is the status with regards to the bill that is being passed. So I'll skip those questions. There are questions with regards to what happened with Daily Hunt, which we had covered in the previous quarter as well, with regards to the audit. So auditor change is the statutory requirement. If Deloitte was finishing its 10 years, it is required that they hand over the baton to another auditor, and that is why PwC has come in. Deloitte has given it a clean chit in terms of everything is fine with the company from a financial perspective. Only some internal financial controls that need to be tightened, and that is what they are working with the company on that front. There are questions with regards to MPL, Verse, and API. what are the visibility on future growth in MPL versus in API. As I said, MPL was growing perfectly, and its European business continues to grow with 60-70% YOY growth, and hence we are bullish on the company. Of course, the India business, depending upon how this bill goes, will get impacted, and we'll have to take a call on this company on how things progress. We have time till our fund expires, or let's say matures by next year, end of 7 January 2027, without taking into account any extensions. And it gives us time to kind of assess the situation on what to do about it. Same thing will apply for Verse. I would ask Dheeraj to opine on API, because API seems to be doing very well, and he can opine on what is happening over there.
Yeah, so on API, as I highlighted earlier, this quarter has been a relatively better quarter than what was there the last financial year. So we're at about 10% year-on-year growth. The thing that we need to watch out for is that the company still continues to have leverage, which they will try to delever or refinance that high cost debt during the course of the next few quarters. And the methodology by which they do that will be something that we're watching through a replacement of the high cost debt with the lower cost debt, or through a combination of debt and equity, is something that the company is still contemplating. And we'll get color on that in the next few quarters. As far as exits are concerned, these three companies, NPL, Verse, API, are something that we are working towards, because we will look towards an exit from this through the sale to other investors in the next calendar year, before the fund life comes to an end. Currently, the way the IPO of these three companies is within the next 18 months looks difficult, and therefore our exit will largely be through sale to another investor in the next 18 months, and that is what we will work towards. Expectation is that the exit will happen in the calendar year 2026.
There are certain questions, very similar questions on expected IRR, and do we intend to utilize extension periods?
Difficult to comment on the expected IRR, but at this, as far as the extension periods are concerned, as we reiterated before as well, we were working with the intention of not getting into that extension period, and we'll try and exit these portfolio companies within the 5-year term, which is till January 2027. That's our endeavor at this point of time.
Dheeraj, do we intend to invest any sale proceeds in any IPO anchor portion in future?
No, we are out of our investment period. So any sale proceeds will be distributed back to our investors. We will not be reinvesting anything going forward.
Considering IPOs of Pine Labs, SNT, and 2 listed entities, any broad sense of payout expected by March 2026?
These 2 companies, we expect that they should be listed before March 26, and we will endeavor to exit out them as well before March 26. So at this point, the fair value that you see on the screen now, what our expectation is, it could be higher, it could be different. So the values that you see in Pine Labs, SMT, and potentially in Swiggy and TBO Tech, the balance portions should be exited before March 26.
In fact, SMT, there is a small portion which is OFS as well, right? So that if the IPO happens as per before March 26, that will automatically come out.
Correct. Looks like there are no further questions at this point of time.
We'll wait for a minute to question window to populate.
Sure.
There are questions. Do we plan a further series of pre-IPO?
At this point, I mean, that's a call that the board of Kamal will take. At this point, we're not thinking anything around that line.
Will you exit immediately on listing or utilize the timeline fully post-listing?
Again, it's an IC decision, but some of this we will exit, for example, in SMT, we have our OFS portion, which will exit immediately. And then after that, we will look at how the markets are turning, and then we'll utilize some portion of the time, not the entire time period, and we'll time it accordingly once post-listing. We don't have a lock-in in SMT, and therefore we can exit out immediately after listing as well. And for Pine Labs, there may be small lock-in, but that should not deter our exit plan. So we'll slowly exit out. And as I said, before March 26, we hopefully should exit out both these holdings.
Yeah, and from a past experience, we have been opportunistic in taking exits. In some cases, we have taken on day one or day two itself, like Tata Technologies, SBFC, we exited very, very soon. Parveen, if you can go to those sheets on the exit side, we've been quite opportunistic in terms of taking those exits. Tata Technologies hit 1,300 rupees and from the IPO price of 500, and we took it out. The same for Nykaa or for SBFC. And somewhere we have waited for the right price to be this thing. Swiggy also, we exited a portion, whatever we could exit at 600 rupees because we thought that was quite a good price. Same way TBO Tech was, hitting up, and we thought that's a good price to exit. So we'll exit opportunistically wherever we. I guess there are no further questions, Dheeraj. Would you like to say some words to close the call?
So thank you everybody for joining today evening. We are available. If you have any follow-up questions, please drop us an email and we'll be happy to answer some of those queries. As we've highlighted before, we are in the exit window, and our exit activity will start picking up in the next few quarters, and you will start seeing these proceeds coming back to you with the IPOs of SMT, Pine Labs, and others. We'll work on our exits in the next few quarters, and we'll keep our investors posted as well. Again, thank you so much for joining in this call, and see you later in the next quarterly call.
Thank you.